In this video, we are talking about symmetrical triangle. 1. How symmetrical triangle formed. 2. When to trade. 3. Prof target. Symmetrical triangle. A symmetrical triangle is a chart formation where the slope of the price's highs and the slope of the price's lows converge together to a point where it looks like a triangle. What's happening during this formation is that the market is making lower highs and higher lows. This means that neither the buyers nor the sellers are pushing the price far enough to make a clear trend. If this were a battle between the buyers and sellers, then this would be a draw. This is also a type of consolidation. The price target for a breakout or breakdown from a symmetrical triangle is equal to the distance from the high and low of the earliest part of the pattern applied to the breakout price point. For example, a symmetrical triangle pattern might start at a low of $10 and move up to $15 before the price range narrows over time. A breakout from $12 would imply a price target of $17, or $15 to $10 equals $5, then plus $12 equals $17. The stop loss for the symmetrical triangle pattern is often just below the breakout point. Traders will often place a stop loss just below the breakout point. Thanks for watching. If you want to learn more about Forex trading, and improve your trading strategy, subscribe, like, and wait for next video.